and welcome. This is Samina Nalwala and with me is Agam and you're watching the F&O Show where we take you through all the stock market action. But first up, let's do a quick check how the markets are trading as we see it. It's a quiet Friday blues if you may want to call it. The Nifty not doing very much in trade, threatening the 21,700 level in terms of trade. Well, down about 15 odd points is what we have. In terms of the breadth is also slightly weaker with a clear bias. Actually, no, it's more or less a 50-50 picture. Your top loser on trade today is ONGC, down 4%. BPCL also seeing some profits off the table after a very sharp rally that the stock has seen. Hindalco, Coal India, Tata Steel are some of your other losers. On the winning side, iBank, interestingly, is looking good. You've also got ITC recovering after that big fall yesterday on concerns that BAT may be looking to power its stake. The stock seeing some low-level buying up about 1%. It's not just ITC, actually. The whole FMCG pack that was trading weak is having a pleasant day of trade this morning, seeing some buying emerging for Britannia, Nestle, Tata Consumers and the likes. HUL also not doing too badly, trading flat with a slight positive bias. But the focus is all about earnings. You've got a whole bunch of stocks that are reacting to those. JK Lakshmi is up 5%. Electra Greentech, while it not be an earnings story, is your top gainer on the Nifty 500, up 7%. Yes Bank continues to gain on the fourth straight day of gains coming in with a 3% up move. On the sell side, you've got PFC, Rail Vikas Nigam declining. Paytm also looking weaker. Tata Tele, REC are some of the other counters that are on the sell side. BEML as well is seeing some pressure in trade today, down about 8%. But we've got the management to explain to us about how the quarter has been and whether there is more to it than that catches the eye. Shantanu Roy, CMD of BEML, joins in. Hi, Shantanu. Good morning. Thank you very much for joining us. Shantanu, on the face of it, the numbers seem to be below what the street was expecting or even below your last year comparison in that sense. Can you break those numbers down for us? Tell us if there were any pressure points and if there's more to it than what we just see on the face of it.
Hi, good morning, and thank you for having me with you. Yes, the top line has been flat, both in terms of quarter to quarter, as well as if you look at the 9-month period, the last year and this year as well, it has grown by only 1%. Now coming to the bottom line, there are two aspects. One is the quarter to quarter, the other is the 9-month period to 9-month period. So if you look at the 9-month period to 9-month period, the PBT, consolidated PBT till December 2022 was only 56 lakhs, whereas the consolidated PBT till December 23 is 35 crores, which is a 61 times growth. However, if you look at the quarter to quarter comparison, the PBT more or less remains the same. It is 67 crores. It was 67 crores for the last quarter ended December 22, and it is 67 crores for the quarter ended December 23. The difference is in the profit after tax, and that is purely because of the tax provisions or the tax liabilities that have been accounted for in the current quarter, in the last quarter, December 23, because of the increase in the PBT, which was not the case the last time round. So that is the only reason for the PAT to have gone down as compared to the last year. Now, as far as the sales revenue is concerned, the sales revenue, if you look at the vertical-wise sales revenue, the most encouraging aspect has been that the defense vertical has grown by 55% as compared to the last quarter. So has the rail metro vertical. It has grown by 55% since the last quarter. However, the mining and construction vertical, it has not done too well as compared to the last quarter, only because of certain supply chain challenges. And those supply chain challenges have been because of certain natural calamities for certain items which were to be imported, as well as some geopolitical conflicts, some geopolitical risks that have suddenly cropped up. However, in the last quarter, in the coming 2 months, we can expect that these challenges will be overcome. Only thing is that the supply chain, instead of say 30 days, now it is taking 60 days to reach us. And so in this month, we will get almost all the material which is required to complete this year's numbers, and we'll be able to do that. If we take a look at the overall sales revenue, generally it has been 10%. The trend has been that we do 10% of the complete revenue in the first quarter, 20% in the second quarter, 30% in the third quarter, and 40% in the fourth quarter. So this year, I'm expecting that we will do around 45% of the total sales revenue for this year in the third quarter, and we are well on way to achieve that.
Just a quick question before Agam as well joins in with his questions. Raw material costs have surged quite sharply. I believe they're up 20%, which has driven your total expenses up by about 4%. In terms of an outlook, given that global steel prices remain elevated, what is the trajectory that you're picking up on? Do you feel like there could be higher raw material prices that you will have to grapple with for the next few quarters at least?
Let me explain to you why our other expenses have gone up. Raw material expenses are accounted for separately. If you look at the raw material expenses year on year, it has gone down by 4.64% as compared to last year's material cost. The reason for the other expenses to go up has been because we have taken some development projects and we had to invest, we had to spend on certain consultancy contract and on developing some industry partners to ramp up our indigenization efforts. So that has been the major reason for the other expenses to go up. As far as the raw material costs in the coming period is concerned, or in the coming future is concerned, you see, it depends on a lot of things. It will depend on the geopolitical situation. It will depend on the logistics cost. It will depend on the fuel prices. So all that put together will determine whether the raw material cost further goes up or it further goes down. Now, as a manufacturer, what we can do is and what we are doing presently also is optimizing the design, optimizing the material, and also going for rationalizing as well as going for bulk ordering and rate contracts to mitigate any risk coming out of the increase in the raw material costs.
Okay. All right, Shantanu, a quick word on your order flow for the quarter. Where does your current order book stand? And what kind of execution of that order book can we expect going into FY25?
Well, as on 31st January 2024, we ended with an order book of around 12,379 crores. This financial year, we have booked around 6,600 crores of orders. The present order book mix is around 48% from the rail and metro, around 17% from mining and construction, and around 35% in defense. Now, for the current year, fortunately, we have all the orders with us. So order booking for the current year will not be a real challenge. Execution will, because of lack of order, should not be a challenge. We are focusing fully on the execution for the balance part of the current year. As far as the next year is concerned, yes, a part of the total order book that we will be carrying forward to the next financial year, that we'll be in a position to execute. For example, the orders for defense, the orders for mining and construction, we expect to begin the next year with at least 1,100 to 1,200 crores of orders for the mining and construction vertical itself. And that entire thing will be executed next year. As far as the other verticals are concerned, everything cannot be executed next year. Partly something will go to years beyond that, to maybe next 2 years, next 3 years. For example, the metro order for Bangalore Metro, the execution will definitely start in the next financial year, but the bulk execution will happen in the financial year 25-26, just to give you an example.
Okay. Well, we'll leave it at that, Shantanu. Thanks so much for joining us and taking us through the quarter's numbers as well as what we can expect going forward. We wish you the best for the future. Well, that's the management of BEML. highlighting to us about the various challenges faced by the company and also what we can expect as far as your order book's concerned. But on that note, it's time to slip into a short break. But on the other side, we get you all the action in the futures and options space. Stay tuned. Welcome back. A quick check on the futures and options cues at the moment. And while we do see subdued cues as far as the benchmarks are concerned, let's take a look at how the futures are panning out. So we do have a very little change, in fact, in open interest as far as the Nifty futures go, about 1.4% increase in OI, but that's not substantial. And as far as the Bank Nifty is concerned, again, which is under, in fact, it's not, it's outperforming the benchmarks. And that's where we're seeing a little bit of an unwinding, perhaps about a short covering coming through, especially given the fact that we saw such a sharp cut yesterday, and we also saw an increase in OI. I reckon that some traders are perhaps taking their positions off the table as we move into the weekend. Now, that's as far as your option market's concerned. Where does the overall distribution stand? Let's take a look at that as well. And see. Okay, so that's not changed too much. We do have the most amount of increase in open interest around the 22,000 call, but say for that we don't have too much traction otherwise. Let's get in an expert opinion. In fact, experts for now. We have Soni Patnaik, AVP at JM Financial Services, as well as Amardev Singh, who are head of advisory at Angel One, who's joining us on the show. Good morning to both of you. Now, Soni, let's start with you. Your assessment on the benchmarks.
Good morning, Agam. Thank you so much for having me on the show. So if we look at Nifty individually, I think 21,600 holds a very crucial support going forward. If that is broken today on weekly basis, then we may look at some more downside, maybe towards 21,400, 21,300 also. On the upside, 21,850, 21,900 seems to be building a very strong resistance. So I believe that could be quite difficult for Nifty to take out those resistances today. And considering that yesterday was a lot of long unwinding positions taking place in Nifty, so not a lot of fresh positions that have been formed on the longer side. Speaking about Bank Nifty, we can see some relief today. However, we must also remember that yesterday we'd seen a lot of fresh shorts happening in Bank Nifty. So that's not exactly a very positive sign. There is multiple resistances for Bank Nifty. 45,500, 45,800 becomes a resistance. It becomes more like a sell on rise market as of now. So it's better to just stay cautious from the indices point of view and hedge the positions going forward.
What about you? What is your call on Nifty and Bank Nifty today?
I would say that Nifty, definitely we are seeing some sort of selling pressure, and on the charts clearly there is consolidation which is happening. And also if you look at the put call ratio, that also clearly shows that a lot of call writing has been happening. So that tells me that Nifty is more or less consolidating. So on the downside, 21,500, 550, that's an immediate zone of support, whereas on the upside, 21,750, 800, that's a zone of resistance. So this is the range that Nifty is likely to trade into. And also if you look at the heavyweights, like for example, HDFC Bank or ICICI Bank, which have a significant weightage in Nifty, they are also on a downtrend, but they are very close to crucial support zones. So what could happen is that we could witness a pullback, but that pullback, whether it's sustained, we'll have to watch out for, because Nifty on the daily charts clearly shows that it is in for consolidation. Talking about Bank Nifty is, I would say, weaker placed as compared to Nifty, but Bank Nifty is approaching a very crucial support zone. If you look at the current levels are crucial support zones, so anywhere between 45,000, that's a zone of support. So we could have witnessed some pullback, but again towards 46,000 levels. So it's more or less consolidation and sideways trend that's likely to play out in the benchmark indices.
Soni, what are your top trades today?
So one would be Jubilant Food. Jubilant Food seems to be sort of, forming a rounding bottom pattern and trying to bounce back from those levels. So the support is immediately at 475, 473. Then keeping a stop loss of 475, if it's able to take out the resistance, you can see it heading towards 500 odd levels. The risk reward ratio is quite favorable because, just from 481 to 475 is your risk. And if it's able to pull it off, it can head towards 500 as a short covering pattern. This will be the first pick. The second pick will be on Reliance. I think Reliance structurally we can look at is holding quite strongly. So Reliance will be a buy on dips rather. There are multiple support around 200 and 2850. So I think towards 2900 to 2850 on a positional basis will be a good level to accumulate Reliance, keeping a stop loss of 2800 and target of 3000, 3050.
Okay. Amar, what about you? What are you recommending to us today?
I would say the first is from the pharma space, and that's Lupin. So Lupin continues to be very strong technically on the charts. We've seen some sort of consolidation happening. Currently, it's around 1630 odd levels. So any pullback in the stock towards 1610, 1615, that can be a very good buying opportunity with a stop loss below 1570 and a target of 1685 on the upside. And the second stock to look at is from the banking space, and that is SBI. So SBI is one stock which is very strong technically on different time frames, and also we've seen some significant amount of volume open interest also there. So this is one stock currently it's around 704 levels. So any pullback towards 695, 700 can be a good buying opportunity with a stop loss below the 680 mark and a target of 745 on the upside.
Soni, railway stocks have been seeing some selling over the last few days. Do you think there could be a trade here either on the long or short side?
I think some profit booking we can see from the entire counter, and talking about IRCTC, which has clearly shown some shorts today. I think from current level, you can see that it can test 880 odd levels. So I think one can definitely look for a shorter side in RSCTC for target of 880, keeping a stop loss of 940. If it's able to take out 940, of course, the shorts get negated. So I think this one opportunity can be seen. However, for a medium-term positional play, this obviously looks quite strong. It becomes a later on as a buy on dips, but for a short-term perspective, one can definitely attempt at a short for IRCTC, 880 target and 940 stop loss.
Okay, well, also want to address what's happening in the oil and gas space, because there is a little bit of weakness coming in. But remember, the oil and gas space has done very well off late. And today we do have weakness in ONGC as coming off life highs, in fact, today. We are seeing a sharp knock of nearly 4.5%. The question really is that are traders at the moment now booking profits? And after that, is there a possibility that the stock could correct further, or are we expecting about a consolidation? I reckon that the probability of the stock moving higher at this point in time is a lot lower. Amar, what is your assessment on ONGC? How would you address this?
See, ONGC, we are witnessing some sort of profit booking because the stock has significantly rallied over the last, I would say, 5-6 weeks. And if you ask me, the trend continues to remain very strong. But yeah, this week's high is something which is going to be very important, very crucial. And if you ask me, the levels to watch out for is around 250 odd levels from a short-term perspective. Currently, it's around 260. So any pullback towards those levels, that can be a buying opportunity. But again, on the upside, it would be capped around 270, 275, the recent high. So because this week's high is going to be very important for ONGC. If that is taken out, then the stock is definitely headed towards the 300 mark. Otherwise, we could witness some consolidation. But the trend and momentum continues to favor ONGC as of now.
Right. Soni, can you come in on HDFC Bank as well? What's really happened here is that a few days ago, when we had seen that sharp knock-off on HDFC Bank, well, it made a low of around 1,380 odd rupees. It's not too far off from that mark at the moment, but it has, well, seen a little bit of a recovery from lows of today's intraday lows of somewhere around 1,380 odd. It's a touch and go, and of course it's naturally a stock which has been on a clear downtrend. The question really, Soni, is that are we expecting now about a consolidation in HDFC Bank? Can we in fact assess and perhaps determine that the correction is now over, and based on that, can we play a little bit of a consolidation, perhaps using options and delta neutral strategies on this one?
I think, Agam, definitely it may consolidate for some more time. The consolidation range is quite broad. If I have to observe the options metrics, 1400 straddle seems to be adding a lot of open interest. You can see both call and put have got significant open interest additions. On the put side, of course, 1400 is holding out to be the highest. So maybe there's a chance that if the weekly closing is above 1420 today, there could be a chance that HDFC Bank bounces back from these levels and sees higher levels of 1450, 1460. But not a lot of upside move also can be seen as per the option metrics. There's a lot of significant call writing happened at 1450 call. So until and unless that range is not broken, we may not see significant movement on the upside. Consolidation may continue, so one can definitely go for option strategies like Iron Condor, which protects your downside and the upside, and plays for a good range. So I think the range can be seen of 1450 call, and on the downside can be seen for 1380 put, just to be a little safer. And similarly to hedge also, one can look forward to 1360 put buying on the hedging part, and 1460 call on the buying of the on the call part. So I think this Iron Condor strategy can be played out well for HDFC Bank for the moment.
All right. And the other one that I also wanted to address was Coal India. Let's pull that up, because Coal India has also had a tremendous run. And from what I can make is that at the moment we are looking at about a profit taking, if I can in fact conclude that correctly. Again, Amar, not unlike the stock that we've spoken about earlier, is it the same trend as compared to ONGC?
I would say that Coal India also is witnessing some sort of profit booking. I think that's healthy profit booking. And also what we are seeing is that some of the technical indicators are definitely in very overheated territory. So that tells me that there is going to be some sort of pressure there in the stock. And also, if you look at the OI data, if you look at the different strikes, we are seeing some sort of short build-up happening there because in the Feb, March, and I would say the April series, we are seeing significant open interest being added, and we are seeing some sort of price correction. But that's too early to say. Overall, I would say still be on the buying side because the trend, there is no significant change of trend. On the downside, the stock would have support coming around the 410, 420 level. So that's a level where we could witness some bounce back. But again, this week's high is going to be important and crucial for whole India as well.
Right. With that, thank you very much, Amar and Soni, for joining us today. Have a good Friday, and we'll see you next week. In the meantime, the markets are doing their thing, trading close to 21,700. It's not looking great. In fact, extending yesterday's selling at the day's low point. As we see it, 21,670 is what we have. Agam, you want to comment on this? The pressures again intensifying as we go into the next few hours of trading.
Yeah, and I can also mark out the India Volatility Index, which has moved above the mark of 16 now. And this, in fact, if I'm not mistaken, is at its highest level since June. So, the days of contracted volatility index are, I suppose, behind us, and perhaps to unexpected lines, because it's going to remain at these levels through the course of, the election period. And I reckon that we may not see very low VIX levels from here on. But on that note, it's a wrap on the F&O show, but lots more lined up on the other side. Stay tuned to NDTV Profit.